procedure for refund, etc. So to start with the session, we'll start from the very basics. That is the definition of export. Export has been defined under both the Customs Act as well as the IGST Act. Now, the Customs Act, Section 2, Clause 18 of the Customs Act states, export means taking goods out of India to a place outside India. A very basic definition. And the IGST Act also goes to reiterate the same saying, export of goods with its grammatical variations and cognate expressions means taking goods out of India to a place outside India. Now, the common terms in these two definitions are taking goods out of India to a place outside India. So very basically, we mean sending the goods, that is taking the goods to a place outside India. But there's a catch here. We also have something called deemed exports, which we'll discuss later on, which says that exports, transactions, even though which is not made to a place outside India, will still be considered as deemed exports. We'll discuss it in detail. So to put it simply, export means taking goods out of India to a place outside India. Now that we've established the definition, this brings to a conclusion that export is treated as an interstate supply under GST, and the IGST Act 2017 governs the export transactions. Now we all know that GST is applicable on supply of goods. Even here under exports also, there is a supply of good happening between India and another foreign country, between the exporter and the importer from a foreign country. So our next question should be, why not GST on exports? I mean, what happens to exports? Now, the general maxim for exports is export the goods, but not the taxes. Why? See, exports, if it is included with GST, if the price is inflated with the GST amount, the local exporter, that is the exporter from India, would lose their edge over the international exporters due to the severe competition in the international market. Also, our exporters, if provided that they could export as well as supply locally with this for the same value with the same amount of GST, there would be no one to choose exports over domestic supply, because as we all know, exports is a much riskier transaction compared to domestic supplies. Therefore, to promote exports, because exports bring in so much foreign currency, it develops the country in the global market, the governments all over the world, all governments have concluded that the goods will have to be exported, but not the taxes. Therefore, every government, including the Indian government, they come up with schemes, incentives, and even provide in the laws like the GST Acts some certain benefits to the exporters, so that the incidence of tax, the incidence of the GST is being is not at all burdened on the exporter or the importer of such goods. So how is this incidence of tax eradicated in exports? Is either it's not applicable at the ITC stage itself, that is at the input stage, ITC paid on inputs used in the manufacturing of the goods exported, or at the final stage where the IGST is to be paid on such exports. So in these two stages, the incidence of tax is being controlled. That is, there is no tax being levied. Now, exports, to simply put, is called as zero-rated supplies. It includes zero-rated supplies. What are zero-rated supplies? Zero-rated supplies are supplies on which the GST charged would be 0%. There is no final tax burden on the exporter to pay tax on just such zero-rated supplies. For example, if a supplier is supplying goods, a particular good in both the domestic market and in the international market, that is, he is doing both domestic sales and also undertaking export of such goods, the supplier would be liable to pay GST at whatever percent, say 18% in the domestic market. But if he is exporting the same goods to international market, that is if he's exporting the goods, then the tax on such exports would be 0%. So simply to understand it simply, exports zero rated supplies or such supplies on which the GST charged is at 0%. So as mentioned in the PPT also, this ensures that there is no final tax burden on the exporter who's exporting the goods. Now that there was an introduction to zero rated supply, zero rated supply is provided for in section 16 of the IGST Act 2017. And what does it mean? It means export of goods or services or both, or supply of goods or services or both for authorized operations to a special economic zone developer or a special economic zone unit. The difference between these two inclusions in zero rated supply is that export, as we saw plainly, it is taking goods out of India. But in the second category, supply does not mean taking goods out of India. It means supplying to an SEZ, which for the GST purposes, for the tax laws, is considered as a foreign territory, even though it is in India, not in a foreign country. We look at the details of authorized operations later on in later slides. So zero rated supply, to simply put, it means export of goods or supply to SEZ units. However, the SEZ units, the supply made to SEZ units should be used for authorized operations of such SEZ units. Now, as discussed earlier, zero rated supply means the rate of tax on such supplies is 0. Now, the next question that would come to our mind is, if the rate of tax is 0, does it mean it is an exempt supply? When there is no tax payable on it, it should naturally be called exempt supplies, right? Actually, no, it is not an exempt supply. That is, zero rated supply is not an exempt supply. And to understand this better, we have a differentiation of both the exempt supply and the zero rated supply. So zero rated supply, as we know, it means export of goods or supply to SEZ units. However, exempt supply means supply of any goods or services or both which attracts nil rate of tax, or which may be wholly exempt from tax, or it includes non-taxable supply. There should be a distinction between these two, because zero rated supply does not essentially mean nil rate of tax. If at all the same supply is made in the domestic market, it would be subject to GST. The benefit is only provided because it to promote the exports or to promote the supply to SEZ unit, which in turn promotes supply to foreign countries. So therefore, this is the main distinction between exempt supply and zero rated supply. Coming to the tax payable, that is, under zero rated supplies, there is no tax that is to be payable on the outward supplies. What happens to the ITC paid on inputs used for such outward supplies? The ITC will also be tax free, that is by way of refunds. We'll look at it later. Now, coming to exempt supply, though there is no tax payable on the outward supply, the supplier of such exempted supply is still liable to pay ITC on the inputs used for such exempted supplies. So, under exempt supplies, the ITC will have to be borne by the supplier, even though there is no outward tax payable. But however, under zero rated supply, both the outward tax payable, the benefit of both the outward tax payable and the ITC is provided to the supplier of such zero rated supply. Now, coming to the ITC, we said that the exempted goods supplier is liable to bear the ITC on inputs, right? Can they claim this ITC that is used for the manufacture of exempt supply? Actually, they can't use this ITC for which has been used for manufacture of exempt supply goods. That is, I procure an input by paying ITC, and the same is being used in the manufacture of exempt goods. Can this ITC be claimed? It cannot be claimed. If at all it has been claimed, it has to be reversed under Rule 42 and 43 of the CGST rules. Now, coming to the zero rated supply, what happens to the ITC on inputs which is used for executing the zero rated supply? So, subject to provisions of section 17 subsection 5, that is blocked credits, the supplier is eligible to take ITC on the inputs used for zero rated supply, even if the supply made by such supplier is exempt supply. For example, I am a supplier, I am an exporter, and I'm exporting exempt goods. See, usually if I'm supplying exempt goods in India, I won't be charging GST on the outward supplies, and I cannot claim ITC on inputs used for such exempt supplies. However, if I am a supplier, if I am an exporter exporting such exempted goods, I can still claim the ITC as refund, subject to the provisions of section 17 subsection 5. That is, that such ITC should not be blocked under section 17 subsection 5. I can definitely claim a refund of such ITC. Now, the liability to registration. If I am a person if I am a supplier wholly supplying only exempt supply, I am not liable to get registered under GST. However, for the purpose of zero rated supplies, for the purpose of claiming refund of the tax paid or the ITC which has been paid on inputs, I have to get a registration under GST to apply for refunds. Another basic distinction between exempt supply and zero rated supply would be, for exempted supply, a bill of supply is enough. The document that is issued at the time of exempt supply would be a bill of supply. However, for the zero rated supply, a normal tax invoice has to be issued at the time of supply. So, to summarize, there is a finer distinction between both exempt supply and zero rated supply in terms of what is being included, what happens to the ITC, the registration process, and the documentation process. Hope this slide has made it clear. Now, moving on, we saw that zero rated supply exports are called zero rated supply. And what happens under zero rated supply? What are the benefits? We've been talking about benefits provided to exporters. What actually are the benefits provided under zero rated supplies? Exports, there are two options. Exports can be made without payment of tax or with payment of tax, and later it can be claimed as a refund. Now, under without payment of tax, that is, I'm an exporter, I want to export my goods without payment of tax. What do I have to do? I have to file a bond or a letter of undertaking, that is LUT, undertaking that I will export the goods within so and so time, failing which I will pay the taxes along with the applicable interest. Now, coming to export with tax payment and refund later, here I export the goods by paying taxes on them, and later on I file for a refund application and go ahead with the refund of getting the refund of the taxes paid by me. Now this export along with tax payment and claim of refund has few, it cannot be done by few notified persons or goods. That has been clearly provided in the provisions. Now, looking at export under the first option, export under bond or LUT without payment of tax. Now, this is the most preferred option. Also the LUT is the most preferred among both the bond and the LUT. Now, Rule 96A of the CGST rules states that an exporter to execute the bond or LUT prior to export or supply to an SEZ unit or developer, binding himself to pay the tax due along with an interest at 18%. So this says an exporter has to file this LUT or bond. When do they have to file it? That is before the export or before the supply to the SEZ. And what do they do by filing this? They undertake to pay the tax along with interest if they don't export the goods within the specified time limit. Now this time limit is, this payment of tax with interest has to be made within 15 days after the expiry of 3 months or such period as may be allowed by the commissioner from the date of issue of the invoice for export if the goods are not exported out of India. Let's say, for example, we'll understand this simply. I am an exporter. I have issued a tax invoice for export. I have filed my returns stating that I've also filed my LUT and bond prior to export itself, stating I am exporting these goods, and therefore I don't want to pay taxes because I filed my LUT. So I don't pay taxes on such supply that I've shown as exports. Let's say 3 months down the line, I've still not exported the goods which I had declared as exports in my returns. And now I would be liable to pay the tax along with interest within 15 days from the end of expiry of the 3 months. Now this 3 months time will be considered from the date of issue of the invoice for such exports. So let's say even this, that is even the payment beyond non-exporting beyond 3 months, and I am liable to pay the tax and interest. Even if I fail to do this, what will happen is the facility to export without payment of tax, that is the facility to export by filing a bond or LUT and not paying taxes, will be withdrawn, and recovery actions under Section 79 of the CGST Act will be undertaken. Let's say in future I have paid this interest along with this tax along with interest. Will the facility be restored to me? That is the facility to export without payment of tax. Will it be given back to me? Yes. If you have paid the tax along with interest, and yes, you can get the facility back. That is, you can export goods by filing bond or LUT without payment of taxes. So this is export under bond or LUT. Now let's say this prior condition was that you have declared your exports, but you failed to export the goods. Let's take you have exported the goods also. You have also claimed the refund of the tax paid or the unutilized ITC, whatever the case is, but you have not yet realized the sale proceeds of such exports. So in this case, the proviso to Section 16, subsection 3 of the IGST Act says, provided that the registered person making zero-rated supply of goods shall, in case of non-realization of sale proceeds, be liable to deposit the refund so received along with applicable interest under Section 50 of the CGST Act within 30 days after the expiry of the time limit prescribed under the FEMA Act. So this says I am making, the registered person is making zero-rated supplies and they have not yet realized the sale proceeds. But what is the condition for realizing the sale proceed? The FEMA Act provides a time limit of 9 months to realize the sale proceeds from the date of export. Therefore, if I have not realized my sale proceeds within this time limit, and I have also claimed the refund of the tax paid or the ITC, unutilized ITC, now I have to deposit the refund back and also pay applicable interest under Section 50. So the previous case was I failed to export. Now I have exported and I have also claimed the benefits of such zero-rated supply, but I have not yet realized the sale proceeds. So under this category, I have to deposit the benefits that I've received. That is the refund that I've received, the tax paid along with the interest, applicable interest. Now we've been talking about LUT and bond. However, what is the difference between such LUT and bond? So LUT, any registered taxpayer exporting goods can utilize the benefit of LUT. That is, I undertake to export the goods within 3 months, and if I fail to do such exports within 3 months, I undertake to pay the tax along with applicable interest. Now, what is bond? For LUT, there is a condition where it says any person, any taxpayer who has been prosecuted for tax evasion of 2.5 crores or above under the GST law cannot go for the option of LUT. Therefore, such taxpayer and all assessees other than all assessees under LUT also, any registered taxpayer can file for LUT except someone who's prosecuted for tax evasion of 2.5 crores or above cannot go for LUT. However, under bond, all assessees can go for the option of bond if so both are furnished for export of goods without payment of taxes. Now the format is LUT has to be filed online on the GST portal. However, the bond has to be executed on a non-judicial stamp paper in hard copy and it is to be submitted. Now the validity of LUT is valid for 1 financial year. For every new financial year, a fresh LUT should be applied. So if there are any discrepancies found in such LUTs filed every year, such LUTs, if not corrected within the prescribed time, can also be cancelled. For bond, if the conditions mentioned in LUT, such as the tax evasion condition, and also the conditions at the time of filing LUT, we'll have to provide certain declarations, which we'll look at in the later slides. If such conditions are not followed, complied with, or if the mistakes in the LUT has not been corrected within the prescribed time, the LUT will be revoked and the bond will have to be executed. Now, what about bank guarantees? Under LUT, you don't have any bank guarantees. You are not required to provide any bank guarantee. However, for bonds, an amount not exceeding 15% of the bond amount at the discretion of the jurisdictional deputy or assistant commissioner. For example, there is a taxable value of 1 crore, the tax value of 1 crore that I am undertaking to pay, and that I'm undertaking to export the goods without payment of tax of 1 crore. 15% of such 1 crore will have to be provided as bank guarantee when a bond is being executed. However, the same is not required in case of LUT. Now, moving on to the LUT formats and how to file it. So the LUT, as we saw, it is to be filed in the GST portal. It is an online document that has to be filed in the GST portal. How do we access it? We log into the GST portal, go to the services section, go to user services, and there is an option specifically given, furnish letter of undertaking. Upon clicking the same, we'll be directed to a form called GST RFD 11, which is furnishing of letter of undertaking for export of goods or services. This form will be applicable for filing LUT, and we have to fill in the details in this form. So starting with the details, the first detail is we have to choose the financial year for which we are applying the LUT. If I'm applying the LUT for financial year 25-26, then I have to choose financial year 25-26 from the drop down. After choosing the financial year, we have to upload the previous letter of undertaking, if any, and the file format should be PDF or JPEG, and the file size should be less than or equal to 2 MB. So previous LUT will have to be uploaded in this section of the RFD 11. Now, we discussed in the difference between LUT and bond, right? If certain conditions that has been provided for at the time of filing the LUT, if they are not satisfied, the LUT will be revoked and a bond has to be executed. So these are such declarations that the taxpayer or the exporter who's exporting the goods without payment of taxes under LUT has to satisfy. That is, they declare that they will export the goods or services without payment of IGST within time specified in sub-rule 1 of Rule 96A. The next condition is they will observe all the provisions of the GST Act and rules made thereunder in respect of export of goods or services. And the last condition is they undertake to pay the IGST thereon in the event of failure to export the goods or services, along with an interest of 18% per annum on the amount of tax not paid from the date of invoice till the date of payment. So first, as we discussed, they are undertaking to export the goods within the time limit of 3 months. Next, they are undertaking to comply with all the provisions of the GST Act and rules. And finally, they are undertaking to pay the taxes along with an interest of 18% per annum on such taxes which has not been paid till now. And this interest will be calculated from the date of invoice of the exports till the date of payment. Now, this declaration is being given by the exporter filing LUT. And this LUT also has to bear the details of 2 witnesses. That is, after the declaration section, the name, address, and occupation of the independent and reliable witnesses will have to be entered, and it has details like name, occupation, address, their state, PIN code, etc. So 2 witnesses are required to file such LUT. And finally, filing of this LUT requires the sign of authorized signatory who has been added as authorized signatory in the GST portal. So in the place of filing the LUT field, enter the place, choose the person who has to sign the LUT and go ahead with signing the LUT by either a DSE or through EBC. Now that we saw the format of LUT and where to where to check for it in the portal, what is a bond? We saw that bond has to be executed as a hard copy. It has to be submitted as a hard copy. And this is one such format of the bond for export of goods or services without payment of IGST. Now, in this bond, we undertake we almost undertake the similar conditions as an LUT. However, we'll read through this bond. That is, we hereinafter called obligors are held and firmly bound to the President of India in sum of the tax rupees to be paid to the President, for which payment will and truly be made. So we also declare that we bind ourselves as well as our respective legal heirs and executors, and the date is given. And we also, in the next section, it is provided that we are permitted from time to time to supply goods without payment of taxes. Moving to the next part of the bond. Here, the details of the bank guarantee has been provided. So, in this section, we declare that whereas the commissioner has required the obligor to furnish bank guarantee for an amount of, we mentioned that 50% of the tax bond value amount, and we declare that we would undertake to give a guarantee of this amount in addition to the tax payment that we undertake to pay in case of failure of exports within the time limit. So in the next part, the person who's undertaking to sign the bond has to give in their signature and the date and place. And as seen in the LUT, two witnesses here also will have to sign provide their name and address and also give their signatures. So this is the simple format of bond. Now this is all about LUT and bond. We look at certain specific examples or conditions, categories of exports. So what happens to exports of goods to Nepal or Bhutan? Are they covered under export of goods? Because the export proceeds from these countries are realized in INR. Does it mean if it is not received in a foreign exchange, convertible foreign exchange, will it not be called exports anymore? That is not actually true. Under GST, there is no requirement that the export proceeds should strictly be in convertible foreign exchange only. So therefore, the RBI allows for receipt of the export proceeds to these countries in INR also. Therefore, this will be covered under export of goods under the IGST Act 2017, as there is a good taken out of India to a place outside India. Therefore, this is called a zero-rated supply. Now, another condition, such situation is, I am sending or taking goods out of India for exhibition or on a consignment basis for export promotion. Now, what happens in this case? There is no supply because there is no consideration being received on this goods sent or taken out of India for exhibition. Therefore, if it is not even a supply, it is not a zero-rated supply either. Therefore, do you need an LUT or bond to send these goods out of India? No, an LUT or bond is not required to send these goods out of India. However, let's say these goods that have been sent outside India is not brought back within 6 months or has not been sold there within 6 months, then it would be considered a zero-rated supply. Can you claim, if it is considered a zero-rated supply and you have not filed LUT or bond, you've also not paid GST on such zero-rated supply, can you claim the unutilized ITC as a refund? In this case, that is, it has not been sold within 6 months. It has been taken out of India and it has not been sold in abroad within 6 months. No, the ITC, which is lying as unutilized, cannot be claimed as refund in this case. If it is sold within 6 months, then it would be treated as a normal zero-rated supply, and you can claim the refund of the unutilized ITC. Now, the next question is, Are all the supplies to an SEZ unit or an SEZ developer zero rated? Now, we saw in section 16 of the IGST Act itself that zero rated supply means supply made to an SEZ unit or SEZ developer for authorized operations would be considered as zero rated supply. Now, what are these authorized operations? These authorized operations have been specified in the letter of approval issued by the Development Commissioner of SEZ of the SEZ Act. To simply put, it includes activities such as setting up or developing an SEZ unit. It also includes goods supplied for the construction of buildings or etc. of such units. These are these are examples of such authorized operations. So the section very clearly says only if the supply is made to the SEZ unit or SEZ developer for the purpose of authorized operations, it would be called a zero rated supply. Otherwise, the other supplies which are not other supplies other than the supplies made for authorized operations would not come under zero rated supplies, and it would be chargeable to tax under normal provisions of GST. However, these supplies made to SEZ unit or developer for authorized operations will be treated as zero rated supplies, and you are eligible to claim a refund on the tax paid on such supplies or the unutilized ITC lying in the credit ledger for the inputs used on such supplies. Therefore, all the supplies are not essentially zero rated supplies. Only such supplies made to SEZ for the purpose of authorized operations will be called zero rated supplies. Now the next question is, are all supplies to export-oriented units considered zero-rated supplies? Export-oriented units are units which are exclusively involved in the export of goods or services. Have there been any special schemes or special benefits given to export-oriented units? Not essentially. They don't come under zero-rated supplies. However, they are considered as deemed exports. So we look at deemed exports in the next slide. Therefore, the supplies to export-oriented units are not considered as zero-rated supplies. Moving on, the next category of exports, till now we were discussing zero-rated exports. That is, the goods have been taken out of India or the goods have been supplied to an SEZ for authorized operations. Now, we will be discussing something called deemed exports. That is, even if the goods have not been taken out of India, there are certain category of transactions which would still be called exports, that is deemed to be exports. Now, these deemed exports have been notified under section 147 of the CGST Act. Now, 147 of the CGST Act also says these goods that are called as that are known as deemed exports, right? They have to be manufactured in India. These goods should not be taken out of India. That is, they should not leave India, and the payment for these goods has to be in INR or in convertible foreign exchange. Therefore, the supply of goods should be manufactured in India. It should not be taken out of India, and the proceeds should be in INR or convertible foreign exchange. Now, what are the notified exports that fall under this category? Notification number 48/2017 notifies the exports that are known as deemed as exports. They are supply of goods by a registered person against an advance authorization. So advance authorization is an authorization given by the DGFT under the foreign trade policy to promote the exports. That is, they give import duty-free imports. It allows for such those taxpayers to import or to purchase goods duty-free to promote and to reduce the burden of customs duty on such manufacturers who in turn use such imports to export goods, to manufacture the goods that is being exported. So, if a supplier is supplying goods to a person holding such advance authorization, it would be known as a deemed export. Now, supply of capital goods by a registered person against EPCG authorization. So, EPCG authorization is also given by the authorization given by the DGFT under foreign trade policy. This is export promotion capital goods authorization provided to the taxpayers or the exporters to allow them to import the capital goods duty free, provided they fulfill certain export obligations. That is, they can import the capital goods free of customs or free of any taxes, provided they satisfy the quantity or the certain conditions that has to be satisfied while they're exporting goods by using such capital goods for manufacturing them. So any supply of capital goods by a registered person which has been provided to a person to a person holding EPCG authorization will be considered deemed exports. The next category is supply of goods by a registered person to export-oriented units. As discussed earlier, export-oriented units do not fall under zero-rated supplies. However, any supplies made to such units which are exclusively involved in the export of goods or services will be deemed exports. The last deemed export is supply of gold by a bank or PSU against advance authorization. So therefore, all these categories go on to prove that exports are being promoted. That is, the burden of the exporter to pay the input tax is being reduced. So these deemed exports, how are they different from zero-rated supplies? We established that these are not zero-rated supplies because they are not moving out of India, or they are not being supplied to an SEZ, which is essentially a foreign territory for the purposes of GST Act. If they are not zero-rated supplies, there is no option for the exporter to export such supply such goods under bond or LUT. Therefore, deemed exports can only be made with payment of taxes. There is no option of making deemed exports without payment of taxes. Now, when they make deemed exports with payment of taxes, they can claim a refund of such taxes paid. And such taxes which have been paid, they can utilize the ITC that they've been used, that was incurred on the purchase of inputs and used for the export of goods, right? Such ITC can be adjusted against the output tax payable, and the balance amount of can be paid by cash. They will get a full refund of the tax paid on such deemed exports. So this is about deemed exports. Moving to another category of exports is merchant exports. Now, under merchant exports, there are two people, a manufacturer exporter and a merchant exporter. Now, this manufacturer exporter, they'll be exclusively involved only in the manufacture. They won't be involved in the export side of the transactions. So they'll manufacture the goods, and there is a person called merchant exporter who's exclusively involved in the exporting of goods. They will have no idea of the manufacturing processes. So this manufacturer exporter exports or supplies the goods to this merchant exporter, and this merchant exporter exports such goods under a bond or LUT. So in this scenario, for merchant exports, export is possible only, and it is mandatorily to be made by a bond or LUT, under a bond or LUT. So for deemed exports, we saw bond or LUT cannot be used. The deemed exports have to be made with payment of taxes for sure. But for merchant exporters, the exports will have to be mandatorily made under a bond or LUT. Now, let's say the bond exports have been made under bond or LUT. What are the benefits provided to the manufacturer exporter and the merchant exporter? The merchant exporter, we'll start with manufacturer exporter. The manufacturer exporter will incur some ITC. He will pay some taxes on the inputs used, and he supplies the goods to the merchant exporter at a concessional rate of 0.1% of GST. Now, this 0.1% of GST that he charges on the goods supplied to merchant exporter, there is no tax implication on him because he recovers the tax from the merchant exporter and pays it to the government. So there is no money going out of his own pocket. However, for the inputs, it would obviously be in higher percentages, right? It might be under 5%, 12%, 18%. Can he claim any benefits? Yes, he can claim a refund of such ITC incurred on the inputs used for the merchant export supplies. Now, this is it for manufacturer exporter. Moving on to merchant exporter, provided he exports the goods under a bond or LUT, he can claim a refund of the tax paid to the merchant exporter. That is his input tax. The tax paid by him on purchases from the manufacturer exporter can be claimed as a refund as per Rule 89. Now, there are certain conditions that has to be fulfilled to claim the benefits by both the manufacturer exporter and the merchant exporter. A tax invoice will have to be issued by the manufacturer exporter to the merchant exporter, and the goods that have been issued to the merchant exporter will have to be exported within 90 days from the date of the tax invoice issued by the manufacturer. So the manufacturer issues an invoice, and from the date of such invoice, within 90 days, the merchant exporter should export such goods. Now, these goods that is being exported, can the merchant exporter bring it to his premises, his place of business, or keep it in some other warehouse till the date of export? No. The merchant exporter will have to directly move the goods from the manufacturer, from the premises of the manufacturer to the customs port. There is no stops in between for the goods. It has to be moved directly to the customs port. Only then these concessions for merchant exports will be provided to both the manufacturer exporter and the merchant exporter. So till now, we've covered under export of goods, zero rated supplies, deemed exports, and merchant exports. We'll have a quick summary of all these three. Zero rated supplies or exports made to a place outside India or supplied to SEZ. And this zero rated supply can be executed under two methods. One is with payment of tax and a refund being claimed later on, and another is without payment of tax by furnishing a bond or LUT. Now the next category is deemed exports. That is, though the goods do not move out of India, they are still deemed as exports as per the provisions of the GST Act. And under deemed exports, the export can be made only with payment of taxes and a refund can be claimed later on. And coming to the last category is merchant exports. Merchant exports are, it includes two parties, manufacturer and an exporter. Manufacturer exclusively involved in manufacturing, exporter exclusively involved in exporting. There is a concessional rate of 0.1% charged on the goods supplied to the exporter, and the refund can be claimed by both the manufacturer and the exporter on the ITC paid on inputs that they have procured. Now, the exports can be made only by way of furnishing a bond or LUT and without payment of taxes. Therefore, next, moving on to refunds. So till now, we've discussed about what are exports and what is the mechanism of exporting. We've been talking about refunds. We'll briefly touch upon the refund provisions, and the refunds have been provided for in section 54 to 58 of the CGST Act and rules 89 to 97A of the CGST rules. Now, what do these refunds include? It includes a huge, it includes numerous categories. For the purpose of this discussion today on export of goods, following are the four categories on which refund can be claimed. Zero rated supply of goods or services, inputs or input services used in making such zero rated supplies, or supply of goods regarded as deemed exports, or refund of unutilized ITC as provided under section 54 subsection 3. That is, for the purpose of today's discussion, zero rated supplies made without payment of tax. So the first two categories are zero rated supplies made with payment of tax. For example, we pay 100 rupees as IGST, we claim 80 as ITC, 80 rupees as ITC, and pay the balance 20 as cash. So the cash paid, the tax paid through cash can be claimed as refund as per the first category, and the ITC availed can be claimed as refund as per the second category. Now, this ITC which has been claimed as a refund will be subsequently used for the subsequent exports with payment of tax. Now, the next third category is the supply of goods regarded as deemed exports. We saw earlier that deemed exports will be compulsorily made with payment of tax. There is no option to do it without payment of tax. So such payment of taxes made on deemed exports can also be claimed as refund. Now, refund of unutilized ITC as provided in the section 54 subsection 3. The refund, the exports which was made under a bond or LUT by paying taxes, without paying taxes. That is, exports made by furnishing a bond or LUT without payment of taxes. What would happen to all such ITC on inputs used for such exports? Those unutilized ITC lying in the credit ledger or lying in the books can be claimed as a refund under the refund provisions. Now, how do we apply for a refund? We apply for refund through form GST RFD01 through the GST portal. We file it online through the GST portal. However, this form GST RFD1 is not required in cases where the export of goods outside India is happening. That is not for all zero rated supplies. Only when there is an export of goods and GST has been paid on such export of goods, the export has been made outside India. So in such cases, the shipping bill filed by the exporter itself is enough application for the refund. They don't have to specifically or separately file application form under GST RFD 1 to be eligible to claim the refund. So as per Rule 96 of the CGST rules, the shipping bill shall be deemed to be an application for a refund of IGST paid on the goods exported out of India. Now, this is the normal process for applying for refund. How do we apply for refund on deemed exports? Under deemed exports, there are two options. One is the supplier can charge tax on the invoice and recover it from the recipient. In this case, the recipient is eligible to claim refund. The recipient can apply for refund in this case. However, when the supplier is charging GST on the invoice and is also not recovering it from the recipient, the supplier can go ahead and claim the refund, provided the recipient has undertaken to not avail the ITC on such goods without even paying it, provided the supplier has an undertaking from the recipient that they have not claimed the ITC on the goods supplied by him. So as provided in the slide, so in respect of supplies regarded as deemed exports, either the recipient or the supplier is allowed to file the refund application. The refund for deemed export supplies is the refund of tax paid on such supplies. So deemed exports, as we kept seeing repeatedly, can be made only by paying taxes. So, however, the supplier can seek a refund only in case where the recipient does not avail ITC. If in case the refund was being claimed by the recipients and there were certain issues with the GST portal regarding claiming the refund, because it required them to debit the amount of ITC initially and then go for claiming the refund. In such cases, this ITC which has been debited is obviously treated as ITC utilized by the recipient, right? So certain benefits have been provided. That is, such ITC which has been debited on deemed export supplies for only for the purpose of claiming refunds. If not for the refunds, the recipient would not have utilized such ITC. So such ITC which has been debited only for the purpose of claiming refunds is not treated as ITC as per the provisions of Chapter 5 of the CGST Act. That is, Section 17, the restrictions of apportionment or blocked credits do not apply for such ITC. Irrespective of the such credit being blocked or being eligible under Section 17, subsection 5, this ITC would be available to the recipient to debit from the electronic credit ledger for claiming the refund. So in short, it is also such ITC is also not considered as ITC which is ITC availed and which has to be reversed under Rule 42 or 43 of the CGST rules, because it has been only claimed for the purpose of claiming refund. Now we saw how generally we apply for refunds and what is the special procedure to be followed in case of refund for deemed exports. What happens to refund on supplies to SEZ? In respect of supplies to an SEZ, the application for refund shall be filed by the supplier of goods after such goods have been admitted in full in the SEZ for authorized operations as endorsed by the specified officer of the zone. So we saw in the zero rated supply, meaning that the supplies to SEZ unit or developer will have to be made for authorized operations only. All other supplies which are not made for authorized operations will not be zero rated supply and will not enjoy the same benefit of refund benefits. So how do we know for sure that they have been made for authorized operations only? The supplier can file for refund application only after the SEZ admits that all such supplies have been used only for authorized operations, and which authority monitors such declaration from the SEZ? A specified officer of the zone will have to endorse the declaration by such SEZ that they have only used it they've used the whole amount of supply only for authorized operations. Now, who is a specified officer here? It means a specified officer in the ranks of joint or deputy or assistant commissioner of customs for the time being posted in SEZ, or an authorized officer by such specified officer. And this authorized officer can be an inspector, a preventive officer, a superintendent of customs posted in SEZ. And as mentioned, they have to be authorized by the specified officer to discharge any of his functions. Therefore, for a supplier to claim to apply for a refund on supplies that they've supplied to SEZ, the SEZ has to declare that they've used it only for authorized operations, and the same has to be endorsed by the specified officer. Now, what is the time limit for claiming refund? Section 54, subsection 1 of the CGST Act says application is to be made before the expiry of 2 years from the relevant date in prescribed form and manner. And the relevant date, the details of the relevant date has been provided as an explanation to the sections 54. So the application, that is the RFD 1, has to be filed within 2 years from the expiry of relevant date, before the expiry of the relevant date. Now, the relevant date in terms of different exports is for the export of goods, that is the goods which have been exported out of India. The relevant date means if the goods have been exported by sea or air, the date on which the ship or the aircraft in which such goods are loaded leaves India. And if such goods have been exported by land, the date on which such goods leave the land frontiers of India. And if the goods are exported by post, the date of dispatch of goods by the post office concerned to a place outside India. So the relevant date in terms of export of goods outside India, where the tax is paid or the ITC is eligible for refund, is in terms of exports by sea or air, when the ship or aircraft leaves India. In terms of exports by land, when the goods pass the land frontier, and in terms of export by post, when the date of that is the date of dispatch of goods by the post office is considered the relevant date. Now, what is the relevant date for deemed exports? So, relevant date means in the case of supply of goods regarded as deemed exports, where a refund of tax paid is available in respect of the goods, the date on which the return relating to such deemed exports is furnished. So, in this case, when I'm undertaking some deemed exports, I would file in my GSTR returns, I would declare such exports in my GSTR returns, right? So the date on which such exports have been declared in such returns will be considered as relevant date for the purpose of applying for refund for deemed exports. Moving on to the relevant date for supply of goods to SEZ. Relevant date means in case of zero rated supply of goods or services or both to a SEZ developer or a SEZ unit, where refund of tax paid is available, or the refund of inputs or input services used in such supplies, the due date for furnishing of return under section 39 in respect of such supplies. If I am a supplier, I am undertaking to pay, I am undertaking supplying of goods to SEZ unit or developer for authorized operations, the relevant date for me to claim, to apply for refund would be the date of due date of furnishing return under section 39. Section 39 is our due date to file GSTR 3B. So this is the relevant date for supply of goods to SEZ. Now, the last category is unutilized ITC. That is the ITC which was left unutilized when the exporter avails the option of export of goods without payment of taxes under a bond or LUT. The relevant date in this case means, in the case of refund of unutilized ITC, the due date of furnishing return under section 39 for the period in which such claim for refund arises. So the refund, the ITC refund for whichever period we are claiming on, the due date of GSTR 3B of such period will be considered as the relevant date for applying for the refund for claiming the ITC. So these are the relevant dates for export of goods, for deemed exports, for SEZ, supply to SEZ, and for refunds on unutilized ITC. Now moving on, what are the documents that have to be submitted for applying for refund? Now this has been provided under Rule 89, Sub-Rule 2. For the export of goods, a statement, a mere statement containing the number and date of shipping bills or bills of export and the number and date of relevant export invoices. You don't have to file the whole invoices themselves. A statement containing such number and date of shipping bills and the statement containing the number and date of such export invoices is enough. Now, for the supply of goods to an SEZ unit or developer, the document required would be a statement containing the number and date of invoices along with the evidence regarding goods admitted in full for authorized operations as endorsed by the specified officer of SEZ. So as we saw earlier, refund is possible. The application for refund by the supplier of goods to an SEZ is possible only when the SEZ admits to using those goods for authorized operations, and it has to be also be endorsed by a specified officer. So such statement has to be submitted, and a declaration should also be submitted that there has been no tax collected from the SEZ. So for an SEZ, supply of goods to SEZ, in addition to details of invoices, we should also submit a statement where the SEZ states that they've used the goods only for authorized operations and the specified officer has endorsed it, and a declaration from the supplier himself that they have not collected any tax from the SEZ. Now, in addition to these details, specific details, a declaration by the claimant, that is the supplier or the exporter, that there is no unjust enrichment or the incident of tax has not been passed on to any other person. To simply put, unjust enrichment would mean I have not claimed any refunds or I have not claimed any other benefits or any incentives or any schemes. I have not claimed any benefits of such tax paid on exports or the ITC used on inputs for such exports. And I should also declare that this incidence of tax, the tax that I have paid has not been subsequently passed on to my recipient or any other person. So this declaration is needed if the refund claim is less than 2 lakhs. However, if the refund claim goes beyond 2 lakhs, a certificate in Annexure 2 of Form GST RFD 1 has to be furnished by a chartered accountant or a CMA. So in this case, the certificate by the CA or CMA will state that there is no unjust enrichment or the incidence of tax has not been passed. So this is in addition to the invoices that has to be filed while applying for refund. Now there is an option of refund on a provisional basis. So the main reason for providing the incentives or the benefits to exporters is to enable them to enjoy easy liquidity or to not have any working capital issues. So such exporters, they can, on application of GST refund, the officer grants provisional refund in certain cases, and one such case is zero rated supplies. Zero rated supplies are exports out of India and supplies to SEZ. So this provisional refund is applicable to up to 90% of the refund claims. That is, if I'm claiming a certain amount as a refund, 90% of such refund claim will be provided as a provisional refund within 7 days from the date of acknowledgement. That is, the proper officer, after scrutiny of the claim and going through the evidences submitted by us and being satisfied that the refund is actually genuinely eligible to the exporter, they shall issue an order in the prescribed form, RFD 04, sanctioning the amount of refund due to the said applicant on a provisional basis within 7 days from the date of acknowledgement. Now this acknowledgement would be provided in form RFD 02. So within 7 days from the date of such acknowledgement, a provisional refund would be provided to the exporter up to a percent of 90%. Now this balance 10% of refund that has been held back will be provided in the normal course of refund process. That is, it would the normal refund process would go on, the scrutiny of all these applications, everything would go on, and the balance 10% at the end of the process will be provided to the exporter. Now let's say I have claimed a refund. We saw earlier that proviso to section 16 subsection 3 of the IGST Act says you have exported the goods, you have claimed the refund, but you have not received the export proceeds within the time limit mentioned under the FEMA Act. Under such a situation, the exporter was to deposit the tax claimed as refund along with applicable interest. Now, what is the procedure for the same? How will it be recovered? How will the refund be recovered? Rule 96B specifically provides for the procedure of recovery of refund of unutilized ITC or IGST paid on export of goods where the export proceeds were not realized. So the condition is, as discussed earlier, that the export proceeds have not been realized within the time limits prescribed under the FEMA Act. The applicant, therefore, the applicant must deposit the refunded amount along with interest. Now, this time limit for depositing the amount, right? The depositing the refund that I have claimed along with the applicable interest is 30 days, within 30 days after the expiry of the allowed period. That is the time limit of 9 months allowed under the FEMA Act. After the expiry of such time limit, within 30 days, I am supposed to deposit the tax that I claimed as refund along with the applicable interest. Now, what happens if I fail to deposit such tax amount along with applicable interest? If the applicant does not repay the refunded amount on time, the government will recover the amount under sections 73, 74 or 74A by following the same recovery methods for erroneous refunds, including interest as specified under section 50. So either I pay the refund of tax paid or unutilized ITC along with interest, or the department goes ahead and recovers the same along with interest under section 73, 74 or 74A. What is the exception to this recovery of refund? If at all the RBI waives the requirement to realize the sale proceeds based on merits, the refund already paid to the applicant will not be recovered. Let's say I have claimed a refund. I have failed to receive the export proceeds within the time limit mentioned. I have deposited the refund that I have claimed along with applicable interest, and now I have also received the export proceeds that I did not receive within the specified time limit. Can I get back the refund on such export proceeds? You can get back the refund on after realization of sale proceeds, provided that the applicant has already been required to repay the refund amount. If the applicant was already required to repay the amount, and they've later managed to get back the receive the sale proceeds, and they provide the proof of such receipt or such realization within 3 months of receiving such proceeds. So I have repaid the refund that I have claimed along with interest, and then later on I'm receiving the sale proceeds. From the date of receiving the realization of receiving the sale proceeds within 3 months, if I provide a proof and submit that I have received the sale proceeds, I can get back the refund on such unutilized ITC or IGST paid on exports. So the refund process is, the government will refund the amount that was previously recovered from the applicant to the extent of realized sale proceeds. So if I have to receive the full amount of sale proceeds to be eligible to receive the refund of full unutilized ITC or IGST paid in full. If I only received the part amount, the refund that will be sanctioned back would also be proportional to this realized sale proceeds. Now the next part is invoicing for exports. So the invoicing for exports has some usual normal provisions as per the GST Act. However, certain specifications like the invoice should carry an endorsement stating this supply is meant for export on payment of IGST, or it should state that supply is meant for export under bond without payment of IGST. So an export invoice has to specifically have this declaration that supply is meant for export with IGST or without IGST under bond or LUT. Now there is a doubt as to which currency has to be mentioned in the export invoices. Should it be INR or should it be the currency of the country to where I am exporting my goods to? There is no restrictions on mentioning any specific currency in the export invoice. As per the RBI master directions, the currency can be mentioned in INR also, or it can also contain the foreign currency. So there is no restriction. These two are some specific conditions regarding invoicing for exports. Now, one basic question is, can unutilized ITC be given a refund? So as we saw earlier, unutilized ITC in the case of zero rated supplies made without payment of tax, that is under bond or LUT, can be provided as refund under section 54 subsection 3 of the CGST Act. So this is it for today's session on export of goods GST implications. Hope the session was useful and enlightening to a certain extent. And we are open to questions. So please put forward any queries that you have. So we have got one question where the question is, one of my clients made an export transaction with payment of tax. Details are, the product value is 10 lakh, IGST at 18% is 1.8 lakhs. So the total invoice value is 11.8 lakhs. We have filed the return and claimed IGST refund of 1,80,000. Now, payment received from the recipient is only 10 lakhs and excluding the tax. Since the customer has not paid the IGST portion, the balance of 1,80,000 remains outstanding in the customer ledger. How should the accounting entry be recorded in this case? Should we keep the balance as receivable from the customer or write it off as an expense? So, ideally, it should not have been accounted under the customer's account, sir. It should have been accounted as refund receivable. However, in this case, you can go ahead and write it off as an expense and close the entry. Another question that we have received is, what is the difference between nil rated and zero rated? Sir, one basic difference would be the ITC on zero rated supplies, the ITC on inputs used for zero rated supplies would be eligible for a refund. However, in case of nil rated supplies, such ITC cannot be claimed as refund. It cannot be claimed at all because the goods have been issued at nil rates. Another question is, what is deemed exports? So deemed exports are transactions which essentially don't of goods which essentially don't go out of India. But however, certain notified transactions have been provided as deemed exports, which has been shared in the PPT. So we'll share the PPT at the end of the session. Please go through the slide. Another question is it mandatory to claim the input used for export made through merchant exporter? The reason being supplier is unable to have a breakup of inputs used. Sir, I don't think it is mandatory to claim the input used for merchant exports as refund. Another question has come, that is, I have applied for LUT and not exported the goods during the year. Is there any problem because of it? Sir, there is no problem if you have applied for LUT and not exported any goods during the year.
Yes. So I am taking up the next question. This is Prashant Surya. Sir, I am supplying software and technical services to SEZ zone. When I take GST registration, I have mentioned my services, software and technical service, but not mentioned export. Is it required to add my service as export of service? Uh, Vanita madam, for export of service, there is no special SSC code, ma'am. So it is not required, ma'am. If we have correctly established that we are providing software and technical services with that SSC code, that is sufficient, ma'am. So separately for export of service, there is no SEC code. It's only a service accounting code. The same thing you can export. That's it. So what you are exporting, if you had added it in our SEC list, that's fair enough, ma'am. Then Ravindra Pujari, madam, if a manufacturer exporter supplies goods for the purpose of exporting EO units, then it can avail the benefit of 0.1%. Yeah, if the EOU, if export oriented units subsequently sells if they only are going to export, the merchant exporter will be able to avail that benefit definitely. So they can definitely sell at 0.1% provided they satisfy the conditions mentioned therein. Because the there are some conditions attached to that merchant export transaction also. For example, within 90 days, the goods should have been exported. In shipping bill, the supplier number should have been given. The manufacturer exporter supply should have been given. So if they can satisfy that conditions, then they can definitely supply it at 0.1%. Next is Varshini madam's question. A person is engaged in export of goods under LUT to US company. US company has their own company in India. Once they have asked them to deliver goods to India, but consideration is received from US parent company and billing is done to US parent company. Ma'am, one thing with respect to export of services is, ma'am, if the export of services is done to the same establishment, same distinct persons, that is my parent company situated in another country, then it will not come under export of service definition, ma'am. I think I need some more details to say whether it would cover under export of service, ma'am. But from the mere point of view that you tell that we are exporting to the same establishment to us, in that case, will not be covered under export of service, ma'am. Next, M. Gopalakrishnan sir's question: is it mandatory to claim the input used for export made through merchant exporter? Reason: supplier unable to have breakup of inputs used. Sir, of course, ITC claim is not mandatory, sir. It is only at the discretion of the taxpayer. So if they opt not to claim it, they can very well deny it to claim it, sir. We are getting IMS implemented shortly also. So if we could correctly disclose it in IMS and GSTR 3B in table 4B, then it is not mandatory to claim at all. Hanish Payangapadu, the question is, what are the documents required for manufacturing exporter making invoices? There is not separate set of documents as it is, sir. The same the same invoice and e-waybill is enough, but there are certain conditions that they should comply with, sir. For example, as I already said, the export should have been made within 90 days. The shipping bill should have the GST number of the merchant exporter. So they should satisfy some set of conditions, sir, upon only which they would be eligible for 0.1% benefits, sir. So for refund, should be considered CAF for FOB value in case of goods. So it always FOB value is preferred. What are things to be remembered while supply of services to SEZ? Supply of services to SEZ also. The same, if we could take LUT, then we can supply without payment of tax, ma'am. There are no. With respect to SEZ sales, we will have a separate session, ma'am. If a company A is situated in SEZ and purchased laptops from company B, which is outside SEZ, the supply was with GST but not zero rated, and company A has claimed the input but not utilized. Can the same unutilized ITC be claimed as refund? Company A is situated in SEZ. Pani Kiran has asked this question. If a company A is situated in SEZ and purchased laptops from company B, which is outside SEZ, the supply was with GST, not zero rated. Yeah, they can claim the ITC and take it as refund, ma'am. But one thing is, only Section 54 has introduced wording says that only if it is for authorized operations, we can claim refund, ma'am. So we should further deliberate on the point whether it is for the authorized operations of the SEZ. PPT will be forwarded to every one of you attended the meeting. Yeah, thank you. After taking LUT, can I raise export invoice with payment? Yes, Sudhakar sir, that can be done interchangeably, in our opinion. Only the thing is, while the goods are exported without payment of tax, the LUT number need be mentioned. But we have seen practical cases where the roving squad will interrupt and say that you have LUT, so you cannot pay, you cannot export with payment of GST. There are some scenarios, but in our opinion, the legality is not the problem here. The understanding with the roving squad is only the problem. We can definitely, after even taking LUT, we can definitely make some exports with payment of tax. Manufacturing exporter can sell goods to merchant exporter at 0.1%. Am I correct? Yes, sir. You are correct. Yes, sir. SEZ supply Jan 25, LUT February 25. Any problem? Sir, there would be some queries raised from the department point of view, sir, but we can definitely say that that is only a procedural lapse, because in law it is clearly given that we should have got LUT before supplying to SEZ, but we should convince the department to say that this is only a procedural problem, and we didn't have any intention to evade the tax as such. Is all refund above 2 lakhs will require CS certificate? Yes, sir. All refunds above 2 lakhs will require generally require CS certificate, sir. You can also refer to circular number 125 for better understanding, sir. There for every refund, they would have given a separate set of documents. About 2 lakhs means generally a CS certificate would be required, sir. Nil rated and exempted are same. No, nil rated and exempted are both not same, sir. Nil rated is something which is given as zero rate of tax in the notification. Exempted is something which is exempted as per law, as per notification number 2/2017 and 12/2017. LUT or bond is for whole year? Yes, sir. Yes, sir. We can apply it for whole year, ma'am. Actually, for the entire financial year, we can apply LUT. Okay, due to the paucity of time, we would be taking the questions personally. If anything, you please mail us. Thank you for attending the session. Thank you for your patient listening. Thank you.
Thank you everybody for attending today's session. So please mail your queries to our mail ID, which is displayed on the screen. We would be addressing the same. Thank you.